Right now, the world's wealthiest people are making money in their sleep. And they're not doing it through luck. They're not doing it through some secret. They're doing it through one simple thing that most people were never taught in school: the stock market. Here's a number that might surprise you: $44 trillion. That's the total value of the U.S. stock market today. And the average American has almost none of it. Not because they can't, because nobody ever explained it to them. That changes right now. By the end of this video, you'll understand exactly what the stock market is, how it works, and why millions of people use it to build real wealth. Let's get into it. Here's the harsh truth about money. If you keep your savings in a regular bank account, you are losing money. Not slowly losing money, rapidly losing money. Why? Because of inflation. Inflation means prices go up every year. On average, things cost about 3% more each year. Your bank savings account? It pays you maybe 0.5% interest. Do the math. You're falling behind by 2.5% every single year. So what do wealthy people do differently? They put their money to work. They invest it. They let it grow. And the number one place they do that? The stock market. But most people have no idea what the stock market actually is. So let's fix that right now. The stock market is not a casino. It's not a get-rich-quick scheme. It's not just for Wall Street suits and expensive offices. The stock market is a marketplace. Simple as that. A place where people buy and sell small pieces of real companies. Think of your favorite company. Maybe it's Apple. Maybe it's Nike. Maybe it's McDonald's. These companies need money to grow, to build new products, hire more people, expand around the world. So what do? They split the company into millions of tiny pieces called shares, and then they sell those shares to regular people, people like you and me. When you buy a share, you own a tiny piece of that company. And here's the exciting part. If that company grows and makes more money, your piece becomes more valuable. You make money. That's the stock market. That's it. Let's break this down step by step. Step 1. A company decides to go public. When a company is just starting out, it's owned by its founders and maybe a few investors. But when it wants to raise a lot of money fast, it does something called an IPO, initial public offering. That's just a fancy term for the company starts selling shares to regular people. Facebook did it. Google did it. Amazon did it. And anyone who bought those shares early made an absolute fortune. Step 2. Shares get listed on an exchange. An exchange is just a place where buyers and sellers meet, like a marketplace for stocks. The two biggest exchanges in the United States are the New York Stock Exchange and the NASDAQ. These exchanges are where all the buying and selling happens. Step 3. The price moves up and down. Here's where it gets interesting. A stock's price isn't fixed. It changes based on supply and demand. If lots of people want to buy Apple stock, the price goes up. If lots of people want to sell Apple stock, the price goes down. What makes people want to buy or sell? Mainly two things. 1. How well the company is doing. If Apple releases a hit product, people want to buy. Price goes up. 2. How people feel about the overall economy. If there's bad news about a recession, people panic and sell. Prices drop. Step 4. You make money in two ways. First, the stock price goes up. You bought at $100. It's now worth $150. You made $50. Second, dividends. Some companies share their profits directly with shareholders. They literally send you a cash payment just for owning the stock. This is called a dividend. Both of these are how investors build wealth over time. Let's make this real with some numbers you can actually feel. Example 1, Amazon. Back in 2001, one share of Amazon cost about $6. Today, one share of Amazon costs over $180. If someone invested just $1,000 in Amazon in 2001, that $1,000 would be worth over $30,000 today. That is the power of investing in great companies early and holding on. Example 2. The S&P 500. Now, most people don't pick individual stocks, and honestly, that's totally fine. The S&P 500 is an index. Think of it as a basket containing the 500 biggest companies in America. Apple, Microsoft, Amazon, Google, all in one place. When you invest in an S&P 500 index fund, you own a tiny piece of all 500 of those companies at once. Here's the number that matters. Over the last 100 years, the S&P 500 has returned an average of about 10% per year. That means $10,000 invested today could grow to roughly $67,000 in 20 years. Without you doing a single thing. That's compound interest. Albert Einstein reportedly called it the eighth wonder of the world. When your money earns returns, and then those returns earn more returns, it snowballs. Example 3. The everyday investor. You don't need to be rich to start. Most investing apps today let you buy fractional shares. That means you can own a piece of Apple for as little as $1. The stock market is no longer just for millionaires. It's for anyone who wants to start building wealth today. Let's bring it all together. The stock market is a marketplace where you can buy small pieces of real companies. When those companies grow, the value of your shares grows with them. You make money two ways, through the stock price going up and through dividends paid directly to you. The best part? You don't have to be an expert. You don't have to pick the perfect stock. A simple S&P 500 index fund, one that gives you exposure to 500 of the best companies in America, has averaged about 10% returns per year for the last century. The stock market rewards patience, not perfection, not timing, not luck, just time in the market. The single biggest mistake most people make? Waiting to start. Every single year you wait, you lose the power of compound interest. You leave money on the table. The best time to start investing was 10 years ago. The second best time? Today. Now, I want to be clear. Investing always carries risk. Markets go up and markets go down. But over long periods of time, the stock market has historically rewarded patient investors more than any other asset class on earth. If this video helped you understand the stock market for the first time, I want you to do one thing. Just one. Hit the subscribe button. Because next week I'm covering exactly how to open your first investment account. Step by step. No jargon, no confusing terms. You've spent years working for your money. It's time to make your money work for you. Subscribe for more money tips every week. I'll see you in the next one.